Most traders step into the market believing they are here to conquer price, outsmart other participants, or find a technique that will shield them from loss. But the market is not an opponent, and it certainly isn't something you conquer. The real battleground has always been internal. The greatest problem a trader ever faces is the unresolved conflict between what the market is and what the mind wants it to be. You don't lose money because the market moved against you. You lose because a part of you refuses to accept uncertainty. You hesitate because a hidden belief convinces you that risk can be avoided. You exit too early because your mind seeks relief instead of clarity. You hold losers because your ego needs to be right more than it needs to grow. Mastery begins when you stop trying to control the market and start learning how to control the meaning you assign to every tick, every fluctuation, every outcome. When you let go of the illusion that the market owes you clarity or comfort, you finally free yourself to see opportunity as it truly is, neutral, boundless, and always available. A trader who understands this simple truth rises above the emotional storms that have destroyed countless accounts. They learn that certainty is a trap, fear is a habit, and inconsistency is not a skill gap but a mindset gap. And the moment you shift your beliefs, truly shift them, you step into a world where the market no longer intimidates you, outcomes no longer define you, and every trade becomes an expression of a confident, self-empowered mentality. The greatest problem in trading is not the market, not volatility, not algorithms, and certainly not a lack of information or technical skill. The greatest problem in trading is the mind that refuses, absolutely refuses, to see reality as it is. Every blown account, every inconsistent streak, every moment of hesitation, fear, or revenge trading comes from one root cause: the mental resistance to accepting the market's true nature. When you step into the world of trading, you enter an environment that is completely indifferent to your expectations, emotions, hopes, and fears. The market offers endless opportunity, yet it does so without structure, fairness, or guarantees. It will not adapt to your desires, nor will it reward you for effort, talent, or ambition. It only reflects behavior, decision-making, and the beliefs driving those decisions. And this is where the core problem begins, because the human mind is conditioned to impose meaning, to search for certainty, to seek patterns, to avoid pain, and to control outcomes. But the market is none of those things. The market has no memory. You do. The market has no expectations. You do. The market has no fear, no shame, no pride. You do. The market does not care about your last win or your last loss. You do. Your mind arrives with emotional wiring shaped long before you ever placed your first trade. It arrives with beliefs formed from childhood, from school, from society, beliefs about winning, losing, being right, being wrong, avoiding pain, seeking security, proving yourself, protecting your identity. These beliefs operate subconsciously, influencing your perception of risk and uncertainty without your awareness. And when these internal patterns collide with the nature of the market, an environment built entirely on uncertainty, they create distortions, illusions, and emotional conflict. This conflict is what causes a trader to freeze when they should act. It's what makes you cut winners too early and let losers grow into disasters. It's what creates those sudden, irrational impulses you swear you'll never repeat again, only to find yourself doing them in the next moment of pressure. The market triggers emotional responses that expose the gap between what you consciously understand about trading and what your subconscious refuses to accept about uncertainty. In reality, the market doesn't hurt traders. Traders hurt themselves because they impose expectations that clash with randomness. They want certainty where none exists. They seek comfort in an environment that offers none. They chase predictions even though the market does not move in straight lines or promises. They want to avoid loss even though loss is an unavoidable component of probability. Most traders intellectually understand that anything can happen. They have read it, heard it, repeated it, and even preached it to others. But internally, emotionally, they do not believe it. Deep down, they still expect the market to respect their strategy, their analysis, their trend line, their stop loss. They expect patterns to behave the way they behaved last time. They expect a candle to move in their favor simply because the setup looks perfect. This mental resistance creates a distorted perception of the market, one where you see what you want to see, not what is actually there. It blinds you to risk, amplifies fear, generates hope, and creates the illusion of control. And once your perception is distorted, your decisions inevitably follow that distortion. Think about how many times you entered a trade because it felt right, even though the setup wasn't complete. Think about how many times you moved a stop loss because you hoped the market would turn in your favor. Think about how many times you added size impulsively because you were up big and felt invincible. Think about the times you hesitated to pull the trigger because the last loss still echoed in your mind. None of these actions reflect what the market was doing. They reflect what your mind was doing. A trader's mind creates the illusion of certainty to avoid discomfort. It creates emotional narratives to justify decisions. It creates expectations because expectations provide a sense of control. It creates fear because fear feels protective. It creates hope because hope numbs uncertainty. But none of these mental constructs have any influence on price movement. The market doesn't reward hope. It doesn't punish arrogance. It doesn't respect fear. It doesn't respond to your emotional needs. It simply moves, neutral, fluid, unpredictable in the short term, structured only through probabilities over a large sample. The refusal to accept this neutrality is the greatest psychological barrier to consistent trading. When a trader refuses to accept randomness, they take trades personally. When they refuse to accept uncertainty, they seek comfort instead of clarity. When they refuse to accept loss, they sabotage themselves to avoid emotional pain. Your mind tries to convert trading into something familiar, something that fits your old survival patterns. It tries to turn the market into a game of being right or wrong. It tries to avoid loss the same way it avoids personal failure. It tries to protect identity instead of capital. But trading is not compatible with those instincts. The market demands emotional neutrality while the mind seeks emotional safety. The market demands acceptance of uncertainty while the mind seeks predictability. The market demands responsibility while the mind looks for blame or justification. This is why trading feels psychologically overwhelming. Two worlds collide. The external world of probabilities clashes with the internal world of beliefs. And until that internal world is reprogrammed to align with how the market actually operates, inconsistency will remain a constant companion. The mind that refuses to see reality as it is becomes trapped in emotional cycles. Fear after a loss, overconfidence after a win, frustration after missing a move, anger after a mistake, revenge after a setback. These emotions cloud perception and create a biased interpretation of price movement. Each emotion reinforces itself, creating repetitive patterns of self-sabotage. Every trader has lived this cycle. You take a loss, you feel pain, you rush to make it back. You break rules, you take another loss, you feel more pain, you trade emotionally, you spiral, you blow up. This toxic loop has nothing to do with the chart. It has everything to do with the beliefs behind your perception of risk, loss, and uncertainty. To break this pattern, a trader must do something profoundly counterintuitive. Surrender the need for certainty. Not surrender effort, not surrender professionalism, but surrender the illusion that the market can or should deliver comfort. You must accept fully, not intellectually but emotionally, that every trade is just one event in a series of thousands. It carries no special meaning, no personal message, no prophecy about your future. When you truly accept that anything can happen, you stop expecting the market to conform to your projections. You shift from predicting outcomes to executing probabilities. In this state, your mind becomes aligned with reality. You stop taking losses personally because they are no longer threats. They are simply consequences of probability. You stop hesitating because fear no longer controls perception. You stop forcing trades because the need to prove yourself dissolves. You stop chasing because excitement no longer overrides logic. A mind aligned with reality sees the market clearly. It sees opportunity without distortion. It sees risk without fear. It sees losses without emotional pain. It sees uncertainty not as a danger, but as the space where potential exists. When you master this internal alignment, trading becomes simple, not easy, but simple. You stop projecting your beliefs onto the market and start interpreting what is objectively there. Your actions become consistent because your perception is consistent. And consistency, in the end, is the only true measure of mastery. The greatest problem in trading has never been the market. It has always been the internal resistance to accepting its nature. When the mind finally releases the need to impose certainty on uncertainty, you open the door to clarity, discipline, and true confidence. You step beyond fear and into flow. You stop fighting the environment and start flowing with it. Trading mastery begins the moment your mind stops arguing with reality. And when that moment comes, everything changes. Your behavior, your results, and your identity as a trader. You cannot master the market. You cannot bend it, force it, anticipate it with perfect accuracy, or shape it to match your expectations. The market is far too vast, far too complex, far too indifferent to respond to the needs of any individual trader. It is a living expression of billions of decisions, beliefs, and reactions. It moves because people move. It shifts because perceptions shift. And no single trader, no matter how skilled, experienced, or intelligent, can control or master that collective force. Yet every trader, especially in the beginning, tries anyway. Every trader attempts to find certainty, predict outcomes, and create a sense of control. They search for the perfect strategy, the perfect indicator, the perfect entry that can shield them from loss and give them consistent profit. They want to conquer the market, decode it, outsmart it. But every attempt at mastery over the market leads eventually to frustration, confusion, emotional pain, or financial loss. The market will always remind you, often brutally, that it cannot be mastered externally. The only thing you can master, and the only thing that ever truly matters, is yourself. More specifically, the beliefs that shape your perception of the market. Because it's not the market you're responding to when you trade. It's the internal meaning you give to what you see. Two traders can look at the exact same chart, the same candle, the same breakout, and see completely different things. One sees opportunity, the other sees danger. One sees continuation, the other sees reversal. One sees clarity, the other sees uncertainty. The market didn't change, their internal beliefs did. Every action you take in the market is filtered through your beliefs. Every hesitation, every impulse, every fear, every burst of confidence, every moment of doubt, they all stem from a deeper framework of meaning inside you. And unless you bring those beliefs to the surface, examine them, reshape them, and align them with the nature of trading, you will always be a prisoner of emotional conflict. Most traders are unaware that their beliefs are even shaping their decisions. They think they are following strategy, reacting logically, or responding to signals. But beneath that surface layer, beliefs are dictating everything. Beliefs about loss, beliefs about money, beliefs about being right, beliefs about uncertainty, beliefs about worthiness, beliefs about effort and reward, beliefs about control, beliefs about randomness. If you grew up believing that losing is a sign of failure, your subconscious will resist losses in trading. It will make you move stops, refuse to exit, or justify holding a losing position far too long because the emotional cost of accepting a loss feels too high. If you believe you must always be right, you will struggle with probabilistic thinking. You will turn every trade into a test of your identity, and the market will punish you for it. If you believe money is hard to earn or easy to lose, you will sabotage wins or panic during normal fluctuations. If you believe gains validate you, you will chase adrenaline instead of discipline. The market does not create these emotional reactions. Your beliefs do. The market merely triggers what was already buried inside you. When you try to master the market without mastering yourself, you create an unresolvable contradiction. You're trying to impose order on something inherently uncertain. You're trying to force predictability onto randomness. You're trying to control an environment that does not respond to control. And because the market won't conform, you end up frustrated, emotional, reactive, and inconsistent. But when you shift your focus inward, when you decide to master your beliefs instead of trying to master the market, you step into the only form of control a trader can ever truly have: control over perception, behavior, and emotional response. Your beliefs shape what you see. They shape how you interpret risk. They shape your sense of opportunity. They shape your tolerance for uncertainty. They shape your confidence and your fear. They shape the stories you tell yourself when price moves against you or in your favor. Everything you experience emotionally while trading is generated internally. And because it originates within you, it can be changed within you. Mastering your beliefs means reshaping your mental framework until it aligns with probability. It means removing internal conflicts that distort your perception. It means releasing emotional attachments that cloud judgment. It means letting go of the need to be right and embracing the reality that being consistent is far more important. When your beliefs are aligned with the nature of the market, you no longer expect certainty. You no longer demand comfort. You no longer interpret normal fluctuations as threats. You no longer panic during drawdowns or overreact during winning streaks. You begin to see the market as a neutral environment, a field of opportunity uncaring of whether you win or lose, gain or give back, succeed or fail. In this mental state, you stop reacting emotionally because your beliefs no longer frame the market as a personal test or emotional battleground. You stop projecting fantasies onto price movement. You stop assuming outcomes. You stop infusing trades with hope or fear. You see what is actually there, not what you want or need to be there. That clarity becomes your edge. Think of the trader who takes the same setup over and over but gets wildly different results because their emotions dictate their behavior. The setup didn't change, their beliefs did. One day they feel confident and decisive. Another day they feel fearful and hesitant. Same chart, same rules, different internal landscape. And this internal landscape shapes the outcome far more than the external market does. Mastery of belief creates consistency of perception. Consistency of perception creates consistency of behavior. Consistency of behavior creates consistency of results. This progression never works in reverse. Traders try to reverse it. They try to force consistent results without addressing inconsistent behavior. Then they try to force consistent behavior without addressing inconsistent perception. But until the underlying beliefs are cleaned, clarified, and aligned with what the market demands, everything remains unstable. A belief is not just a thought, it is a lens, a filter, a meaning-making mechanism. It defines your relationship with risk. It determines how you emotionally experience uncertainty. It shapes the stories you tell yourself after a loss, whether you see it as information or as personal failure. It influences your willingness to execute your edge without hesitation. It controls your capacity to hold a winner without exiting prematurely out of fear. It dictates whether you take responsibility or look for excuses. When traders experience fear, frustration, revenge, greed, hesitation, or emotional impulses, they often try to fight those emotions directly. They try discipline. They try willpower. They try affirmations. They try forcing themselves clearly. And when those illusions dissolve, what remains is a trader who acts without fear, sees without distortion, and executes without conflict. A trader who is no longer trying to master the impossible, but who has mastered the only thing that ever mattered, the perceptions through which the market is experienced. That is where true mastery begins. Consistency is the goal every trader strives for, yet it remains the single most elusive achievement in the entire trading world. Traders spend years searching for perfect strategies, flawless indicators, holy grail entries, and mechanical precision, but they fail to see the truth that has been in front of them from the beginning. Consistency does not emerge from prediction. It emerges from emotional neutrality. It arises only when you align your behavior with probability rather than the need to know what will happen next. The reason most traders never reach this state is simple. They operate from emotional conflict. A part of them wants to trade like a professional, detached and disciplined, while another part wants certainty, comfort, and reassurance. One part accepts uncertainty intellectually, while another part remains terrified of losing. One part wants to follow rules, while another part seeks emotional relief in the heat of the moment. This internal contradiction pulls the trader in opposing directions, creating inconsistency not because of lack of knowledge, but because of lack of internal alignment. Every trader knows what it feels like to take a perfect setup one day and hesitate on the same setup the next. They know what it feels like to hold winners when they are calm and exit too early when they are scared. They know the sudden urge to increase size after a win, the need to force a trade after missing a move, or the impulse to get revenge after a loss. These behaviors aren't random, they are the direct expression of emotional conflict. Two opposing belief systems trying to operate simultaneously inside the same moment. When emotional conflict exists, perception becomes distorted. You no longer see the market for what it is, you see it through the lens of what you fear, what you hope, and what you want to avoid. A setup that was clear yesterday suddenly looks uncertain today because your mind overlays emotional meaning onto the chart. A small pullback looks threatening after a streak of losses but looks trivial after a streak of wins. The market hasn't changed, your internal state has. This is why consistency has nothing to do with predicting what the market will do next. Prediction feeds emotional conflict because every prediction carries expectation. Expectation creates attachment. Attachment generates fear. Fear disrupts execution. The moment you need the market to behave in a certain way, you lose your ability to act objectively. The moment you try to force certainty out of uncertainty, you step out of alignment with how trading actually works. Probability, on the other hand, removes the emotional charge. When you truly understand and accept that any trade can win and any trade can lose, no matter how perfect it looks, you no longer take outcomes personally. You no longer interpret a win as validation or a loss as an attack. You no longer carry emotional residue from one trade into the next. You begin to see each trade as a simple event with an uncertain outcome but a knowable long-term advantage. Alignment with probability means you stop evaluating the quality of a decision by its immediate outcome. A good trade can lose. A bad trade can win. When you judge your decisions by results instead of process, you train your mind to behave emotionally. You reinforce fear when a good trade loses, and you reinforce recklessness when a bad trade wins. This is the fastest path to inconsistency. But when you judge your decisions by how well they align with your rules, your edge, and your process, you detach from the emotional weight of outcomes. You begin to understand that your job is not to know what will happen next, but to execute flawlessly whenever conditions align with your edge. Everything else becomes noise. Emotional neutrality does not mean you stop feeling emotions. It means emotions stop influencing your decisions. It means you create enough psychological space between stimulus and response so that you act from principles, not impulses. It means you no longer react to the market. You respond to it. This neutrality is not achieved through force or discipline alone. You cannot fight your emotions into silence. You cannot suppress fear through willpower. You cannot demand detachment when your beliefs about loss and uncertainty are still tied to identity and self-worth. Emotional neutrality emerges only when your internal belief system is in alignment with the probabilistic nature of trading. When you truly and deeply accept that uncertainty is not your enemy, that loss is not a judgment, that randomness is not chaos, and that predictability is not necessary for success, your emotional conflict dissolves. Imagine two traders taking the same setup. One trader sees risk and feels fear because they are focused on what might go wrong. The other sees opportunity and feels calm because they are focused on executing their edge repeatedly over time. Both traders are looking at the same chart, the same candle, the same conditions. The difference is internal. One is tied to prediction. The other is aligned with probability. When you operate from prediction, every outcome has emotional meaning. A win boosts confidence artificially, creating recklessness or euphoria. A loss shakes the foundation of your certainty, triggering hesitation or desperation. You become reactive, swinging between extremes, and your behavior becomes inconsistent because your emotional state is inconsistent. When you operate from probability, outcomes lose their emotional charge. A win is just a win. A loss is just a loss. There is no identity attached to either. There is no narrative, no drama, no meaning beyond the simple reality that you executed your edge and accepted the result. You do not overreact because nothing needs to be taken personally. The market isn't talking to you. It isn't rewarding or punishing you. It is simply unfolding. Consistency emerges when your perception of the market becomes neutral. When you stop projecting hope, fear, and expectation onto price. When you stop needing the market to cooperate with your desires. When you see each trade as a unique event with no connection to the trade before it or the trade after it. When you embrace the randomness of individual outcomes and the reliability of long-term expectancy, this is the shift that transforms an emotional trader into a professional trader. You stop trying to predict and start managing possibility. You stop trying to avoid loss and start accepting it as part of the cost of doing business. You stop pushing for certainty and start embracing flexibility. You stop trading to feel good and start trading to execute well. The moment you truly align with probability, your behavior stabilizes. You enter trades without hesitation. You exit trades without regret. You place stops without fear. You allow winners to develop without anxiety. You accept losses without emotional pain. You stop fighting the market and start flowing with it. And because your behavior stabilizes, your results stabilize. Not because you are predicting better, but because you are no longer sabotaging yourself through emotional impulses. You are no longer trading out of fear AF, to a loss or excitement after a win. You are no longer alternating between cautiousness and recklessness. You are no longer allowing your emotions to override your system. When emotional conflict disappears, your actions become consistent, and consistent action over time produces consistent results. This is the paradox of trading. Consistency has nothing to do with being right and everything to do with doing the same thing, the right way, again and again, regardless of short-term outcomes. In this state of alignment, you realize that the market's behavior no longer dictates your behavior. Randomness no longer destabilizes you. Drawdowns no longer define you. Winning streaks no longer inflate you. You become steady, grounded, centered. You trade with clarity because your mind is no longer divided. You are no longer predicting, you are participating. You are no longer reacting, you are responding. You are no longer gambling, you are executing. You are no longer emotionally entangled, you are psychologically free. Consistency is not something you achieve by force. It is something that emerges when internal conflict disappears. It is the natural outcome of a mind that has accepted the nature of the environment it operates in. It is the expression of a trader who has stopped resisting uncertainty and has instead embraced it as the foundation of opportunity. When you align yourself with probability, not predictions, you step into the only path that leads to true mastery. A path where you no longer chase the market, no longer fear it, no longer fight it. A path where your actions are controlled, your perception is clear, and your results reflect the steady hand of a trader who finally understands the real game. Consistency is never achieved by conquering the market. It is achieved by conquering the emotional conflicts within yourself. The moment you stop predicting and start aligning your actions with probability, you free your mind from fear, attachment, and expectation. In that freedom, your behavior becomes steady, your perception becomes clear, and your execution becomes effortless. When you accept uncertainty instead of fighting it, the market stops feeling like a threat and becomes a field of opportunity. True mastery emerges not from knowing what will happen next, but from trusting your edge, honoring your process, and acting without emotional resistance.